Good morning, and we're live. Good morning, and we're live. We got unemployment claims coming up in 12 minutes. We got CAD GDP coming up in 5 minutes. 12 minutes, sorry. Still waking up a little bit. Because it's not 8:20 where I'm at. It's actually 5:20. So we're just going to show some price action. So again, dollar fell hard, like I was explaining it should do. And then we came back up into this area here. That's what this box was. So this is a breaker. So it's a down close before an up move that takes out previous highs and then falls lower. Breaker, mitigation block, to each his own. So basically what it's saying, any big institution that bought here to take out the highs, they're now mitigating their now losses, right? If you buy here, you're gonna be underwater. Come back in here, you mitigate your losses, you can get in sync and sell. So these are areas where if you believe price is gonna be bearish, then you can look for that to sell into there. Beautiful, beautiful fill. I'll get rid of that. So what I really am looking for, minimum, I want price to come down. We got a bearish order block here. Price can come back in, fill here. Once it does that, I would be looking for it to come back down in here, but it doesn't have to do that today. It would probably be about a symmetrical price move. Let's see. It would be more. Hey, Emma. Yeah, stop, please. So from where we're at now, it's going to be about 80 pips on the dollar, which will give us a nice up move in foreign currency. I'm not going to be too greedy and expect it to fall out of earth and come down here. It can, you know, but not required. All right. Well, we'll stay on. Remember that wick I was telling you about? Yeah. Beautiful. Right here. Right? Fair value gap. Fills in. Nice move off it. I would have liked to, and it still can, but I would like to see the pound come down in here before the news, leave these highs intact, come down, fill this in, bullish order block, and we can continue moving forward. If we go back to the dollar, we almost have the same thing up here. It's probably a little too much to ask for considering that right now we're up into this bearish order block. And so far price is reacting off it. So it could just be picking up orders here and it'll continue going higher. Again, I'm not trading it, so in theory, you could be looking to buy here. You could look to buy down here. I wouldn't want to see a turtle soup because this is, we got a swing low in here that could be a market structure break if it does go below there. Let's look at the euro. We got equal highs. Right now price is coming down. We'll just do this. All right, so we got fair value gap, bullish order block, price is leaving equal high, coming down, We also have optimal trade entry, so this could also be an idea for a trade. We got gold coming down into this fair value gap. Didn't quite come down. Hello. There you go. Didn't quite come down into this bullish order block, which in theory, if you look at where this is placed, we're in an old area of consolidation. So what Michael would call this, right? So we have a turtle soup, reversal, market structure break, come down. So it's market maker buy profile, market maker buy model, sorry. We come back down, buy, come up, old area, buy again. Now in the model, this area, I believe is still a buy. If we were to fail and come down into here, the optimal trade entry is not a guarantee, even though no trade's a guarantee. But when we're talking about probabilities, this isn't a high probability because we could just be coming back into a optimal trade entry for, sorry, my nose is itching. Optimal trade entry on the sell side here. Obviously everything goes off the dollar. Gold again, not my favorite thing to trade because it's a little more resistant when it comes to following the dollar, or going against the dollar, I should say. Let's see. We have 5 minutes. I'm gonna share this live here on my social medias. Man, what is going on? And we're posted. So we have a good reaction so far off this bearish order block. Dollar looks like it wants to go for this imbalance I was talking about. Pound, good reaction off here. Euro, same thing in here. At this point, I wouldn't expect when news hits for it to come down and want to grab any more orders or man, got too many nose hairs. About another minute. See what the beast is doing. Yeah, I'm kind of bearish on the beast, even though it's in about 50%, so it could really go either way. But since we took out all this buy side liquidity, came up into area of old selling, came off, consolidated, respecting this up close candle. Look at this as a break in market structure into the consolidation. I like these equal lows. It just looks very clean. For me, it would make more sense. So obviously we have the wick that's here, but we also have this area here and here. This one's a higher low, but also that's another area that looks pretty clean if you take this wick out. So I would think the probabilities is better for this to drop lower, which would be a better buy for the pound to take out all this buy side. Let's see. Let's just see what the numbers were for some giggles. Oops. Wow, we came in pretty low here. That's a pretty good result for CAD 2. So let's actually I don't have CAD. So obviously before the news, look what we had here. We had buy side taken. And what do we have in here? Fair value gap. Price comes up very nice, drops lower. We do have a bounce off here, but it comes back up into a bearish order block. Again, because I think the dollar's pretty bearish right now, or in a bearish retracement. I would like to see it fall down here. Let's move that. Yeah, so come back down again below this low. Institutional order flow entry drill into her. I guess the institutional order entry drill is really in a fair value gap anyway, so I wouldn't put it as two confluences. We have an optimal trade entry, so we'll see. Again, I'm not trading, just looking. Don't want to trade this week because of that insane Monday open we had. I don't trust these pairs. And just to reiterate why I don't trust these pairs. So we're on a 15. Let's drop down to 1 minute. This is the exact reason why I don't want to be trading. Come on, where are you? Oh, did I miss it? Hold on. Okay. Here we go. Man. 2 minutes for no reason. If you go back and look at the time here, there was no news right here. There was no technical fundamental reason for price to jump up 160 pips in 2 minutes, and then in 1, 2, 3, 4, and in 5 minutes fall 200 pips. This will blow an account. This will have you, now you might be saying, yeah, but if I was buying in here, that's awesome. Yeah, there's a pretty good chance that on a move this quick and volatile, you know, if your take profit was wherever up here, it could slip it, and your broker cannot give it to you. You might not get it until your stop loss is hit. You know, it's just stuff like that that you don't want to be in the market. Now, don't get me wrong. If you have an account of X amount of dollars and you are willing to take the risk of, you know, potentially blowing an account or getting a really insane take profit on a move like that, by all means. But I'm with FTMO, so if I lose 5% in a day, they take my account away. So if I'm risking 1% and then my stop gets blown by, you know, 4 more times than what I had it at. So if I got to stop from here to here of, we'll just say 25 pips at 1%. So here would be 1%, 2%, 3%, 4%, 5% you lose, 6%. So it's like, you know, is it likely to happen? No. But if out of 10 trades I would have taken, on the one I lose the 5%, I only need one time to blow my account, and I'm not trying to put myself in a risky spot like that. So we're just sidelined. Yeah, hi Emma, can I help you? Here, you want to say hi? Come here. Come here, baby. Say hi. Say hi. I'm the menace who's always running into the walls over here. Let's see. Let me see what we look like. Meow. Here you go. Say hi. Yeah, I know. Here you go. Go play. Ooh, look at the dollar. Did we fill in this gap? Not 100% all the way because the last candle's here, but we did come back into the top here. So even 50% is reasons for a reversal to happen. Now, it's not optimal for it to come up here, but as long as this high doesn't get taken out, this is all still reasons to believe we're going to go below this low. So as long as we stay below here, we could, because we don't know when or how much the algorithm will like to go back and rebalance price, but we do have this fair value gap in here. It might want to come up in here, fill that in, and then go lower. So right now, here's the way I look at things. Since these numbers were pretty good, right? 193, and it was expected 215, so traders see that and go, nice, we underperformed of how many unemployment claims we had. Nice, the dollar's going to go up. So if I, as Michael says, if I was controlling the algorithm and controlling the market, I would want to have them believe that we're bullish on the dollar right now. We're going to go higher. We're going to take everything out. I would run it up in here, fill in this gap, pick up more sells here, and then I would tank it really quick to get all these buyers off sides and not able to get out. Also, what you're doing here is you're placing stops that might have been here. They might be trailing them up here. So same thing, look over here. We have old high here, another equal high here. We have a lower high here. So it's making the market believe that this is a safe area of resistance. And I expect that to be purged. Again, everything that I know and learn is from Michael Huddleston, AKA ICT, AKA Inner Circle Trader. You can go to his YouTube. He's got a lot of free material, and he's actually releasing paid mentorship material that I was in for a year, personally learning from him with another, hundreds of students. It wasn't like a one-on-one mentorship or anything, but a lot of great insights. If you go back at my other previous streams, they're kind of long, some of them are an hour, but I believe it was right in here, live. I called this area, bearish order block, to be respected, and price fell off. Done it multiple times in this pair too, and in this pair, so just cool stuff. Cool stuff. Yep, so look, CAD came up, and so far let's look at this in a 5 minute. It actually works on all time frames when it comes to filling in gaps. Again, there's going to be times where you might see a very obvious fair value gap that you are aiming for or think price will come down or retrace into. Problem is you don't know which one they're going to go for. So right here on the 5 minute, the CAD, we obviously came down in here and filled this in. You might be thinking, okay, it's going to fill this one in, which it obviously does, but it overshoots. Let's see, do we have another one? We got one right here. From here to really, I believe it's this low. Yeah, it's the same. So, there's one here. It's really just what's the most likely one to be hit. Now, because this is a swing low before big up move, I would expect this one to hold. But it comes back down into here. Probably. Ooh, we've been having some back spasms lately. Should probably sit upright. So if you were looking to trade, you could look at this as dollar coming back up to a fair value gap, bearish order block, looking for it to go lower. It could come up in here. I would not, if the dollar were to take out this high, I would not consider a short on foreign currency. I would look at any kind of retracement up here into a buy in foreign currency. So before I said the beast, oh, it's not the beast. I said the beast, in my opinion, looks more bearish because we took out these stops, came up into an old area of selling, came back into the consolidation, we came up, old area of selling, and we're respecting this area. And so far, between the two, when it comes to buying, the pound's been better, euro's less. So because euro pound, the euro is weaker, and we're looking to buy foreign currency because we believe the dollar is bearish, if you wanted to buy one of these two, your better and more likely buy would be in the pound. And that's straight up technical analysis. I am mostly a technical analysis trader. You know, obviously because of what's going on in Ukraine, there is more fundamental things going on. Like, for instance, I don't know if you've looked around at your local gas station, but here in Arizona, my gas was $5 a gallon, regular, yesterday, $4.99. I was tripping because 3 days ago, I believe, or 4 days ago, it was $4.59, which was still crazy high, but 40-cent hike in less than a week. I don't know if that's legal. And that's got stuff to, that's not just, the war, even though that's what certain people are going to say, oh, it's all Russia's fault. No, it definitely has an impact, but, I would say that if you decide that you're not going to be drilling oil in certain areas, USA, it's probably going to cause speculation for gas to go up in price. I'm all for, investing in clean and renewable energy, solar panels, electric cars. I'm all for that, but you can't just decide that we're going to stop drilling oil, because oil is what keeps us going. I mean, oil is what keeps your house heated. But anyway. So we're about 15 minutes in. It would be nice to see a pretty quick run up in here. So on this high, I mean, it's still 50 pips. That ain't no little thing to sneeze at. See, the problem is because we're having such big ranges. If you looked at this, right, and you said, okay, I want to be in the market. We came down, we respected here, we went above this high. I'd much rather come up above this high as a confirmation, but if you're like, I want to buy in here, and we already said it's going for 50 pips, well, what's your stop going to be? Below here? I mean, that's 42 pips, so you're looking at about a 1-to-1, what is it, 1.2 to 1? If you're looking at above here for a institutional order entry drill, tongue twister, that is 70 pips. So you have a little better, almost a 2-to-1, but just because we have this gap that's still open down here, I don't believe that it's a high probability trade. Some people might think, but if I was trading, I still wouldn't trade. If it was a normal week and we didn't have that amazingly wild 500 pip drop on Sunday's open. Oh, look at the euro. Let's see what's gold doing. Oh, look at that. Gold popped up, came back. CAD. I also wouldn't read too much on prices while they're forming, because again, this candle here, right? At one point it looked like this blue candle up here and then came down. I always look for how candles close, or this is a 5-minute candle, so 3 of these is a 15-minute candle, or whatever. You always want to see how candles close and where they go to while they're forming, and then what they look like when they close, right? So in this area of that fair value gap, so far, these 5-minute candles are respecting it, right? We're not closing above here, which is a good sign if you're bearish on CAD. So, and again, if you were, selling the dollar and buying foreign currency, it's not ideal. You obviously want to see price move away quick, but this is not oh, look, it's reversing, I need to change. I used to, in this scenario, I'd be like, oh man, it's coming down to this bullish order block, we're going to go higher. And it can, don't get me wrong. But You want to stay with your bias and your plan that day of what you're looking for, and have a decided area. Okay, I am selling the dollar until we break this high. Now that is, a good amount of pips, from here to there. I mean, that's 70 pips. So depending on where your stop loss would be on these other pairs, foreign currency, your stop loss might get hit before, yeah, thank you. Your stop loss, probably is going to get hit before it takes out this high, but the overall bias needs to, stay intact. Flipping and flopping, okay, I'm buying now. Oh, it's going against me, I'm selling. Oh, I was right, I'm going to buy. It is not a healthy way to trade. It's not a profitable way to trade. In the long term, you'll get smoked. So I'm going to give this another 12 minutes. Only 30 minutes isn't really long enough to see where price is going after a news event, but since I'm not inside the trade, there's only so much really to talk about. If I was in a trade, we had news at 8:30. I would give price until about 11, 10:30, 11. I would at least want to see it in my favor, whatever percent you'd like, or as many pips as you'd like to see. If price isn't in your favor by then, I would look to managing the trade, whether it's collapsing it, taking partials off. The less time that you're in the market, the less exposure you have to risk, the better. This long-term game is just about keeping your equity as minimal in the red that you can get. And if you do that, you'll make a lot of money. All right, let's see. ICT put a tweet out. And it looks like he sold E-mini S&P. And he made a lot of money on it. I think he made about 20,000. You can go to his Twitter. It's at I_M_the_ICT. Again, pretty annoying that he had to make it that way, but there's a lot of fakes out there that would love for people to think. I've actually been messaged by a few people on Twitter that have a similar handle saying, hey, message me on Kick, hey, message me here and there. And it's like, I know it's not Michael because he makes it open that he's not going to be DMing anybody. He's not going to be messaging anybody. I have my cat on my desk right here laying down, which is cool as long as she's not jumping around. But when she starts hitting keys, it's not ideal. So the dollar's making a second pass up into this bearish order block. I can't see the rest of my screen because my beautiful daughter, Emma, is in my way. Let me vent some opinions of some YouTubers that I still follow. And once again, I was in someone's live stream and takes a trade in gold. Now gold has, a pretty, 15, 20, 30 pips could be from, here to here. Well, I mean, that's the dollar. Actually, we should just go to gold, right? So for instance, institutional order flow entry from here to there, that's 150 pips. It's a big range. So your stops have to be bigger, And this person, they take a buy and they'll put, let's say they bought here. They'll buy here, they'll put their original stop here. So the original stop will be 36 pips. They'll put their take profit up here. So their take profit would be 200 pips. And then when they take the buy, the second it goes in their favor, like 10 pips, they move their stop to break even. Then they close down like half or 80% of the trade. And they're like, yeah, fam, we closed 20 pips at 80%. And then they're like, we're going to let the rest of this trade run. We're going to put our stop to break even and let it run. And then it might go in their favor a little more, and then they close it. And they've got a pretty big following. And these people are in the chat screaming W's. And I'm like, your stop loss was, 40 pips. And you closed down less than 30. Like, how is that a win? That risk to reward right there is 0.5. But these people, they see the numbers go up and they see the profit being made, and it's like, you do realize that when your trade goes against you right away and you take that full loss, it's going to wipe out a week's worth of trades because you're not letting your take profit get hit, fully, or taking partials in an organized manner. It just blows my mind. So I'm really hoping that once I start taking trades on here, the views go up and the subs go up, which I'm sure it will. Right now it's tough. I'm just talking about the market, which, means nothing to people. Also, starting it from scratch up, it's tough to get views to begin with, but no biggie. Gotta just stay consistent. I'm gonna stream as much as I can. All right, I know I said 10 minutes, but I'm gonna call it here. So I'm gonna leave my chart like this. Let's just put, all right, so you want to see this stay intact. We want to see price go above here. Euro again, it can keep retracing as long as we don't take out this low. I'm still bullish on it, taking out these equal highs. Let's go on hourly. Let's get these levels in so we can come back and see what ended up happening. So we want to see price, respect this area. Until next time.